Hi, my name is Tony Giardini. I'm the president and CEO of Trilogy Metals. Trilogy is listed on the Toronto and New York Stock Exchange under the ticker symbol TMQ. For more information about Trilogy, I encourage you to go to our website, trilogymetals.com. Today I'm going to talk to you about our high-grade development and exploration opportunities in the state of Alaska and how we're working with our partners to move forward the Arctic mine and development opportunities in the Ambler Mining District. Before I begin, let me draw your attention to the forward-looking statements contained in our presentation. With that, let me get started. Trilogy has a 50% interest in the Ambler Mining District. That district contains approximately 8 billion pounds of copper, 3 billion pounds of zinc, and over 1 million ounces of precious metals equivalent. We're talking about high-grade deposits here. When I speak about Arctic, you'll see the incredible grades that we have at the Arctic deposit. We're located in Alaska in a safe jurisdiction where there's a strong rule of law. We have significant partnerships, and I'll speak to 3 of those partnerships today: South32, NANA, and ADA. In addition, the Ambler Mining District has significant exploration upside, which I'll also discuss. We have 2 advanced projects: Arctic, on which we have issued a feasibility study, and Bornite, which is an advanced development project, and I'll speak to both. In terms of our share capitalization and balance sheet, we're in incredibly good shape. We have $12 million in cash in the corporate treasury. In addition, as part of a JV interest, we have approximately $72.5 million, which accrues to Trilogy. Our market cap is approximately $262 million. So when you look at the enterprise value, you're talking somewhere around $180 million relative to the 50% interest that we hold in the Ambler Mining District. We have significant major shareholders that have been with us a long time that hold approximately 65% of the outstanding shares. So we're in a strong position to advance the Ambler Mining District to the next stages of development. 3 partnerships that I mentioned include South32, NANA, and ADA. I'd like to start first with South32. South32 is a large Australian-based multinational mining company. They have invested approximately $200 million in Trilogy's so far in terms of the Ambler Mining District, in terms of exploration that was funded, and lastly, in terms of 11.6% stake in Trilogy. Earlier this year, we formed a joint venture with South32, whereby South32 invested $145 million into the joint venture, and in exchange, we provided them with 50% of the Ambler Mining District. We're in a good position working with South32, and we're well funded for the next 4 years, 4 to 5 years, in terms of exploration and development of our asset portfolio. The second partnership I'd like to discuss is with NANA. NANA is a native corporation located in the northwest part of the state. They are an important part of unlocking the value in the Ambler Mining District. NANA has a rich mining history. They own the land on which the Red Dog mine is located. Red Dog is the largest zinc mine in the world, operated by Teck. And in many ways, we're modeling our development of the Ambler Mining District on how Red Dog was developed. What we're doing is we're looking to unlock the value in the district by building a road from the Ambler Mining District to existing infrastructure. And being partners with NANA will go a long way in making sure that we have viable opportunities to develop not just Arctic, but the greater Ambler Mining District. And for NANA, what this means is not just jobs and procurement opportunities for its 14,000 shareholders, but also the ability to have a direct financial interest in the development of the Ambler Mining District, similar to their arrangements with Teck on Red Dog. So we look forward to working very closely with NANA as we move our projects forward. The third partnership I'd like to discuss is with the state of Alaska, and namely the Alaska Industrial Development and Export Authority. ADA played a key role in the development of Red Dog. They effectively funded the road, which was built from a Red Dog mine to the coast, and also funded the port facility. And they entered into a tolling arrangement with Teck to provide for repayment of the loans that were made to fund the infrastructure to allow Red Dog to commence operations. We're modeling our development of the Ambler Mining District on the same basis. ADA will ultimately build the road, and what we will do is work in terms of agreeing on a tolling arrangement with ADA that will allow for repayment of the loans that are made to fund the development of the road and provide an adequate rate of return to ADA. We're in a good position at this point with the record of decision having been received on the road, and we're moving to the next phase of negotiations with ADA in terms of detailed engineering, construction, and financing of the road. This slide shows an interpretation of where the Ambler Mining District is located. As you can see, we're talking about a 211-mile road that will connect the district to existing infrastructure that exists in the state. So from the Ambler Mining District, we would connect to the Dalton Highway, which is a 2-lane paved road. And from there, we would hook up at Fairbanks to existing rail infrastructure, which would allow us to transport concentrate to Anchorage, where an existing port facility is already in place. So we're really looking at the missing link here, which is a 211-mile road, which will help us unlock the value of the Ambler Mining District going forward. The road would be built in 3 phases. It would initially start as an ice road, and from there it would move to a pioneer road, which would allow for development of our first deposit, the Arctic deposit. And then we would move to an all-year, all-weather gravel road, which initially would be a single-lane road with pullouts, ultimately becoming a double-lane road. It's important to point out that the road will be a private industrial use road only, and it will be used strictly for the development of mining opportunities within the Ambler Mining District. This slide provides an overview of one of our deposits in the Ambler Mining District, the Arctic deposit, and highlights a resource of roughly 43.4 million tons at 4.2% copper equivalent. That's a high-grade deposit in anybody's books. And that's what really makes us excited about the opportunities in the district. What we have is we have high grade in a strong mining district with potential for further exploration. We recently completed a feasibility study on Arctic, and what that study indicates is that Arctic is an extremely robust operation. We used the base metal prices that are located, that are indicated on this slide, indicating after-tax NPV of 1.1 billion with internal rate of return of 27%. Based on current spot prices, that after-tax NPV would be over 1.4 billion, and the IRR would be over 30%. In addition, cash costs are low, 32 cents, after you consider copper credit or byproduct credits. If you look at it based on contemporary prices, you're talking about minus 2 cents. The last statistic that I'd like to point out is a capital intensity ratio, which indicates a capital intensity of $6,432 per ton, which is low for the development of a copper asset. In addition, this Arctic project has a swift payback of 2.6 years. What happens next with the feasibility study is it will be provided to the Ambler Metals JV team, which will look at optimizations considerations with respect to the study. They'll look to the throughput rate, the location of infrastructure, the location of tailings facility, and incorporating satellite deposits in the district. From there, we expect to move into the permitting phase, which we see being conducted in conjunction with moving the development of the road forward in terms of the next phase of construction. At the current time, we see a mine life projected to be approximately 12 years, but we believe there's many opportunities to expand mine life beyond 12 years, given the excellent exploration potential in the district. When we look at the district, you can see the number of targets that are listed. This slide also shows the road which would be equidistant to the Arctic and Bornite deposits and would provide ready access to our ability to conduct exploration in the district as a whole. The district has historically had approximately $150 million spent on exploration, but because of the remote locations, it's expensive to conduct exploration in the district. The road will allow us more opportunities to explore further and do that at a more cost-effective basis and effectively provide us more opportunities to add value going forward. When we look at this deposit, it's what's called a VMS deposit, and it compares very favorably to Flin Flon or Noranda, which have operated for decades. In the case of Flin Flon, 75 years, in the case of Noranda, 85 years. We believe that the same potential exists in the Ambler Bornite belt, just given the nature of the existing deposits that we have found and the incredible exploration potential that we see in the district. Going forward, we're focused on the optimization of the Arctic feasibility study, which will commence once the study is delivered to Ambler Metals, which we expect to happen shortly. And later this fall, we expect to approve a budget for next year's field season, where we expect to conduct enhanced exploration, not just around Arctic, but within the greater district as a whole. I thank you very much for your attention in following the Trilogy story. As I mentioned earlier, our ticker symbol is TMQ. We're listed on New York and Toronto. And for more information, I encourage you to go to our website at trilogymetals.com. Thank you again.